Ma sì.
Allora, mi segui di studiare.
Mm. A very beautiful morning to everyone here on this call. Once again from the break. Uh, so I'm your uncle this for the morning market review, where we make money every day. My name is Victor. So we have just 40 minutes. Um, just wait for a few more minutes, let's say 2, 3 minutes max, so we can start off the review properly. Might not be able to wait for everyone, sure, but let's just wait for some persons in order to avoid back and forth, right? So just hang in there just for a few minutes before that's the call. Thank you so much. Okay, so welcome back to the review. I'm sure some persons should have been wondering, no audio, what's going on now. So we decided just to wait for a few minutes for others to join the call, and I think some persons have joined. It's safe to say we can actually start right now, right? So let's go straight into the review. But we are going to be starting from fundamentals this morning. Fundamentals. Now, basically, the fundamentals to an extent, whenever we have fundamentals, they actually have the ability to control whatever we see on the charts at the moment. So it is very, very essential. It's of utmost importance that we are always abreast with whatever fundamentals that we have, or possibly the fundamentals we've had, fundamentals that we are going to be having for the day. And even sometimes there are some fundamentals that even before they happen, it kind of affects the movement on the chart. For instance, have you noticed that just before NFP, a day before, most times NFP, CPI, GDP, the US dollar on the chart, it doesn't really move that much. You know, the investors, traders, retail traders like you and I, they're all waiting for NFPs, waiting for CPI, waiting for GDP in order to have the projection of how the currency is going to be, if it's going to be strong or if it's going to be weak. All right. So sometimes we have some fundamentals that has the ability to stall the movement of price even before the fundamental comes out. So for today, basically, we don't have much high impact news. We're only having OPEC JMMC meeting all day, so this might affect oil. It's not that much of a high impact news. So this meeting are attended by representatives from the 12 OPEC members and 11 other oil-rich nations. All right, so discuss the range of issues regarding energy and market. So basically, we are seeing a little bit of surge. If you check your oil, we saw some surge yesterday. I think Iran also is at it again. So now oil thrives on a lot of movement you can see, especially buying price going up, thrives on bad news. Whenever you see, whenever something is happening to an oil producing nation, like a natural disaster or war, they're about to fight another country or something like that, it kind of affects the supply from that region. Hence, there's a tendency that price will just shoot up. Okay, so we might experience some movement in oil. Then also, we are looking at the USD ADP non-farm employment change. This one is just basically is also a high impact news, and it has the ability to move the market. So it's the estimated change in number of employed people during the previous month, excluding the farming industry and government. Although we're looking at actual data than forecast. So we might have by 1:15 p.m. today, the US dollar gaining some strength. It lost strength for most part of yesterday. So this might recover that strength. Or on the other hand, it might actually further reduce the strength of the dollar. So as the case may be, crude oil inventories also a medium impact news around 3:30 p.m. So we're going to be focusing on USD pairs. Now, it doesn't mean we cannot trade other pairs that we don't have fundamentals. What the fundamental does is to bring volatility into the market, bring a lot of money into the market. So there's money to move around, there's liquidity enough, for price to move. And it is the movement of price that actually gives us profit. So it is good. It is good. Now, some persons trade fundamentals, some don't really trade fundamentals. Personally, I love to trade the aftermath of fundamentals, because what fundamental does for me is to bring in the money to the market. And when the money is in the market, I know that for the next few days, few weeks, price is really, really going to be moving. Okay? And I love price moving because that is where I can make money. All right, so let's start from the USD pairs, so to say. Okay, so this is USD JPY. Like I said, USD JPY naturally is an uptrend instrument, but we've experienced massive retracement. Okay, since July, we've been experiencing massive retracement for the USD JPY pair. And you can see how massive price, moved downward here. But of recent, and the funny thing is that whenever price wants to recover this particular movement up here, it always tends to, come back down again. Tried recovering, come back down again. So the USD JPY has been finding it hard to continue on that upward trajectory. Okay. But let's see. A lot of fundamentals coming up. This is the first week of the month. We usually have our NFP, and the second week CPI, PPI, and the likes of it. So hopefully the dollar gains strength and we'll see a continuous upward movement. But one of the things I love about this market is the fact that you can make money either buying or selling. I want to take this away. Take this away. So let me give you some few tips and tricks that you can apply in order to be very profitable in this market. Some few tips and tricks you can apply to be very profitable in this market. Now, you can obviously see my chart. I love having my chart like this. It gives me, it breaks down, what I'm trying to do already. I don't need to come to my chart and start thinking, should I buy, should I sell? I have them mapped out already. So please, before I go ahead, I'd like to know if you can hear me, please, yes on the chat box. If you can hear me, a yes on the chat box. Oh, okay, I think it's restricted. Okay, some persons are. All right, Chinedu Saj, thank you so much. Thank you so much. I think the vast majority of persons here can hear me. If you cannot hear me, even if I say it, you won't hear. So that's on a lighter note. So let me just show you some few tips and tricks. Now, irrespective of the particular trend, what moves price is basically demand and supply, okay, which is liquidity. We need enough money in the market. We need buyers to buy, and we need sellers to actually come into the market willing to sell. Now, sometimes you can see some of this kind of crazy, massive upward movement or crazy, massive downward movement. Now, this clearly indicates that there's a lot of demand going on in the market as of that moment. Now, there are times where market can be balanced. Let me see, where you have price moving sideways, cases like I'm looking for where we have a lot of range. Okay, for instance, at this point here, just within a short period of time, price was nice, down, up, down, up, down, going. Now, this is bad for the market. It means that the difference between buyers and sellers is not much, or there's practically no difference. There's enough buyers and there's enough sellers. We need an imbalanced market to move price. Imbalance in the market actually moves price. Is that buyers are more than sellers. So when buyers are more than sellers, demand is higher than the supply level. And basically, what that entails is there's a lot of pressure, which increase price. Is my okay? I'm trying to increase my own, which will drastically improve way more becomes a competition price goes so the buyers have a cost price of massively. And if they are way in the market compared to buyers, it means there's an imbalance. And what that does is that it forces price down massively. So there are a lot of persons willing to sell, but there are few buyers. All right. So for those persons to actually sell their stuff, it becomes a competition. They start to reduce price in order to match up with the willing buyers, because the buyers obviously want to buy at a lower price. So sellers have to bring down their price for the buyers to buy. Hence, you find out that market keep crashing and crashing and crashing. Okay, so my audio is still bad. Wow. So currently, as of now, is the audio still bad? I think it's my network. Um, are we good now? Are we good? So we can actually proceed. I need you to have this clear understanding before we look at the chart. So sometimes what causes the market is that we really understand what we are doing in the market. We just come here, look at price, candle going up, buy, or candle going down yourself. No. It's not like that. You need to have understanding to an extent of what exactly you are doing in this market. It helps you, right? So let's proceed right now. So currently, so how do I identify areas where we have demand and supply? So if you notice something, check this out. Okay, let me use current market price. Now, areas where you see Yes, it's network actually. It's the network. When the a lot of time when the sky is kind of foggy, it makes the network so bad. Um, but I guess we'll go through. Just having the network should be better. Should be better. Um, so I think the next time you will just let my idea is I think just to take one more slingshot on this to make sure everything is good. So let's continue. Areas have massive pull up in price like this, this surge, continuous movements. We have different kind of candles. We have decisive, we have indecisive, and we have explosive. We have explosive candles pulling price up like this. Now, you just go back and mark where that level is, the beginning of that particular move. All right, it forms what we call your demand zone. There's a difference between demand zone and support. Yes, it can also serve as support, but support doesn't necessarily need to be demand zone. Support can just be where price, but the zone is where you have much more liquidity for buyers to buy. So when price surges up at this point, anytime in future price comes back to that level, you are expecting to see another massive upward movement again. Okay, so that's one, supply demand. Now, on the other hand, when we are also trading with the this is USJPY. So for instance, I look at my 4-hour time frame, and my 4-hour time frame is telling me that price is, after this massive downward movement, price has been trying to pull up. Now, except for this surge, all the way down in price. Now, what that means is that there are a lot of buyers have, are now offloading whatever they bought. They've offloaded it, and once they finish selling it, and it's going to be at that previous place where you have this explosive candle here. So anytime you see price dropping massively like this, what you need to do is go back to your chart and check all the way down. Where do I have massive to this downward movement? So you mark that level. For instance, if price keep going all the way down, I have another level here at this point. So I'm going to mark it all the way down. So price should not go below this level. I don't know if you get my point. Okay. So that is basically trading demand and supply. Now, there's a lot more to trading demand and supply, but this is just the simple, basic concept of trading demand and supply. Let me walk you through. I think I need to show you this stuff on a number of charts. Now, we can use this concept to take a lot of trades, actually a lot of trades. And when you're trading with demand and supply, the good thing about it is that you have a high win rate probability, but also you need to be patient a lot in the market. You need to wait for price to come into the demand zone for you to be able to buy. And if it doesn't, you are risking a lot of your money. But if it does, then you stand the chance to make a lot of profit. Okay. Now, I think because I've marked this, so let me clear out everything. Start this again. Let me clear out everything. I will start this again. Okay. So the first thing to do is to know the trend. Whenever you want to trade, the first thing is to know which direction is price heading to, which direction. And you can tell that from your intermediate, at least your intermediate time frames, to show you the intermediate trend, where price is going for the last few days. For instance, we have this one here, upward movement. Prior to that, we had this downward movement here, then after which we had this downward movement again all the way down. We have an upward movement again all the way up. Now, this is my 4-hour time frame. So I would recommend you doing this on your 4-hour time frame. Now, we have all of a sudden we have this downward movement. Now, this downward movement obviously is changing our market structure, but we can see that price is trying to recover at the moment. Okay, so now let's say, okay, this upward movement is still valid. Are we right? Now I come down to my lower time frame, either your 1-hour time frame, your 4-hour time frame. Okay, so let me see if I can get a this thing on this guy. Let me see if I can get my trend here. On my 1 hour time frame, I'm trying to draw my trend. So for those who want to draw trend line, you have from the beginning where price started to rise. Now, basically, just let it concentrate more on the first two touches. It gives you a better idea of what price is doing. So 1, 2. Okay. Now, how did I draw this my trend line? This is the first point where price started rising. Now, this is the second point where price came back and it stopped, right? Now, the problem we have is sometimes a lot of persons want to fit in their trend line like this, to capture more of the move. No, you just need to focus on the first and the second. So this is the first all the way here, and this is the second all the way here. So any other thing, any other thing is not my concern. So I said, okay, price tried breaking it, but didn't end up all the way, came back again, tried breaking it at this point, but still came back. A couple of times it has tried breaking it, always coming back. Now, but this time around, it came below. And since it came below, notice that if I extend my trend line to the future, this year I perfectly aligned with this point here where price started to fall. Now, because price has broken my trend line, all right, so price, in as much as price is still going to the upside, it will start going down when it hits my trend line at this point here. So what I do is I mark that area where price broke my trend line. This was the resistance area right here. Okay. This was the resistance area where price broke my trend line. Sorry, my chart is a bit low. Now you can notice, you'll notice that price came back again into that level. Okay, this something like this. Let's mark out this resistance level here. Okay, so price came back to retest that level, was going up not until it hit my trend line, now broke it back all the way. Now, what do you notice? This level of my resistance that became support here is now also serving as resistance here again. So what I'm waiting for price to pull up back to this level, and I will most likely be shorting USD JPY from that point. So at least I'm expecting price to come all the way back down to this level, to this low here, expecting to come back all the way back down this low here. All things being equal, right? So I need price to get here. Now, on the other hand, there's still a tendency that price can break it. Now, reason is because price can decide to continue on that upward trajectory. Now, every time frame, the overall trend is an uptrend. Is an uptrend. Like that is the overall trend. So price will favor more of the overall trend and intermediate trend. So, but I need to know the two, because if I'm always waiting for price to go up, that means I'll wait for price to come down first for me to buy, which might take a long time. So I'm trying to trade both the up and downward movement of price. Okay, so I'm waiting for price to hit this my resistance here to have a possibility of shorting price, price falling massively again. Now, why I'm expecting to get all the way here is because this place here serves as my demand zone. Remember what I told you about your demand zone, right? This area here serves as my demand zone. So that's why I'm looking at the possibility of price coming back to my upward movement again. So that is why we are going to sell, but we need price to fall. Another, okay, USD card. This guy is not clear at the moment. Okay, USD CHF. This guy has been in a range. This guy has been in a massive range. I think the last time I took this review, we're expecting that price should have broken out of that particular range. But neither USD nor CHF has enough momentum to break out of that particular range. So clearly on my 4 hours time frame, what do you notice? What's the current trend here? On my 4-hour time frame. We'll go to Euro CHF after this. On my 4-hour time frame, what do you notice? This is clearly downward trend instrument right here. Price has been tending more to the downside for a while now, especially with my intermediate trend. Now, notice what I did here. Can you see this level I marked up here? That is my supply zone. Notice the first time it was marked all the way here. Now, see how long it took price to work its way back to my supply zone, right? Now, from that point, you can see now from my supply zone, there's definitely the demand zone, okay? Somewhere all the way down here. So let me just draw a line here. Let me see. So if I draw a line at this level here, let's see if price has gotten to that particular level. Okay, now you can clearly see that price is very close to my demand zone. Very close to my demand zone, okay? So that means there's a possibility that price can reverse because the last time price got to my demand zone here, which is this line, let me change the color. Let me just make it like around. The last time price got to this level here, sufficient. I like saying green. Green means I want to buy at that level. Red means I like to sell at that level. Okay, so that's why I got to this. Okay, see that a while kept in the upside. Now this can be so massive. This was from when to when? This was from 2023, December 28th, till all the way to 2024, May 1st. So you can see that for like almost 5 months, price was tending to the upside. Now, you will see price just going up, going up, going up. You don't know why price is obviously going up. Price was obviously moving from an area of demand, working its way to an area of what? To an area of supply. Like I told you from my introductory speech here, I told you that what price is doing is price is basically just doing demand and supply. But if you don't understand it, you always find yourself at the receiving end of the market. Now, demand and supply, what actually causes that is the availability of willing buyers and willing sellers and what they have to buy and sell, which we usually call liquidity. So the ability to buy and sell, liquidity provides that for us. There are times where if we have enough liquidity, price will move from here to here very fast, from our demand to supply very fast. If we have enough liquidity, price will move from our supply all the way back to our demand very fast. It's a large area, okay? It's a large area. No, now how price will move from here all the way here is a different ball game entirely. I cannot tell how long it will take. All I'm just doing is I'm trying to follow consistent movement. So for swing traders, they are going to be swinging it, allowing price to keep going at its own pace. Day trader come every day. I'm looking at the directional bias. It's an upward movement. I'm trying to buy this guy. I'm looking for opportunities to buy. Hence, every single demand zone becomes very, very essential to me. So price has been tending more to the downside. Now, it is obvious that it is very close to our demand area, isn't it? Which shows that there's a possibility that price can reverse. Okay, so I need that reversal to actually start to give me a clear direction for this guy. So, but for now, what are we most likely to do for USD CHF, right? Yeah, so what it means is when price gets to this my range here, at the upper part of my range, I'm looking at taking a sell, okay? Price gets to this my range here, I'm possibly taking a buy for USD. What slightly change the direction here is direction here is possibly NFP or CPI. So we are expecting NFP this week by Friday. Then CPI, we're obviously expecting it the week after. So most likely price will break out for USD CHF. But I've given you the simple trick about it. Right now, where USD CHF is trading inside a small range inside a larger range of demand and supply. All right. So I can obviously keep buying from here and I can obviously keep selling from here. It has been doing it for quite a while now. It has been doing it for quite a while, okay? So why not join the bandwagon here, all right? Majority carries the votes in the market. My analysis on USD on demand zone was not clear on USD JPY. Really? Let me just quickly recap. Meanwhile, this video is being recorded, so you can find it on YouTube, all right? So you can just head over to YouTube and watch this video all over again. So the person that asked the question, please just go back to the YouTube video. You are going to understand it from there. It's going to be clearer, okay? It's going to be clearer. Okay, so basically, let me use USD CHF to actually give you another analysis on that demand and supply zone. Now, irrespective of the time frame you are using, but I would prefer 1 hour, 4 hours max. 1 hour, 4 hours max to do this. Now, how did I explain a demand zone? I said your demand zone is where you have massive movement to the upside, like clear-cut massive movement to the upside. Now we have an indecision candle. Now let me move closer so that you see it. Now, a candle like this is an indecisive or indecision candle. What it means is that the body of the candle, the red or green part, is smaller compared to the whole range of the candle. That means including the high and the low, the upper wick and lower wick. Now, look at how small the body is compared to the whole size of the candle, right? So basically, less than 50%, or if the body is less than 50% of the total range of the candle, then it's an indecisive candle. All right. Now, you can have another candle where the body covers at least 50% or a little bit more of the total size of the candle. So candles like this, you can call them a decisive candle. At least it covers more than 50%. On the other hand, you have another kind of candles, candles like this, where the body of the candle covers more than 70% of the total range of the whole candle. That is an explosive candle. So we have indecisive, decisive, and explosive. Now, so what you are looking for is either a decisive or an explosive candle moving price to a particular direction. So here we have a decisive, we have explosive, we have explosive, we have decisive, just moving price 1, 2, 3, 4, 5. So clearly this is a demand zone. Now, what do you do at demand zone? You are going to mark the candle preceding that move. Now, which candle precedes this move? Now, this one here, this red one, this bearish candle precede the actual move. So I mark the high all the way to the low, and I extend it to the future. Now, what it means is the next time price comes back all the way down, I am looking at taking my buy from here. All right. I'm looking at taking my buy from this level here. Now, somebody can be wondering, oh, why did price go a little bit down before going up? It happens. That is liquidity sweep. Liquidity can happen at any time. But in the long run, even if I have my buy here, in the long run, what happens? Price obviously started buying. But please note this. When price is heading back towards that your demand area that you've extended to the future, I don't want to have an explosive candle pushing price down here. No, it's bad. There's a tendency that can just, run down like that. I don't want it. I need price to slow down when it's getting down. You don't just, when you are driving, just, for it to reverse, you need to slow down to make that return. I don't need price, doing this. On the other hand, if price does this, before this bearish candle close, I need to see something like this, a massive rejection upside. If I don't have that massive rejection to the upside, it means to the upside. Okay, so that is how demand zone works. So I guess you've gotten it clearly right now. So demand zone. Now I don't have explosive candles, decisive candles pulling price up get to this level. So it means this demand zone is valid. Now, for me, I only use a demand zone that I've gotten is valid for once, twice, and three times. After three times, I don't trust that demand zone again. Why? For an area to be a demand zone, price pulls up. Even if it comes back there again, pulls up, I expect that price should continue pulling up and up and up and up. So I'm not expecting it to come back there again. Okay, so it means that price is in an uptrend. So whenever we have an uptrend movement of price, I want to buy at my demand zone, recognize my demand zone, and I want to be taking my buys from that level. Hence, if price comes back here, looking at buy, and on the other hand, if price goes all the way up, you are looking at sell. So the same thing applies to our supply. The same thing applies to our supply zone also. Okay, that's for USD CHF. Okay, Euro USD. Let me look for this guy. Let me look for Euro USD quickly. I think I have it somewhere here. Okay, yeah. All right, so Euro USD is giving us a change of structure here. So let me just remove everything you are seeing here and start again. I like having them. It makes my trading easy for me. I don't need to spend too much time on the charts. Once I do my analysis, I leave it there. I know where I want to buy from, where I want to sell from. It makes it easy for me. I just wait for price to get into my level, then I initiate my trades. So now let's apply the same principle, but first, the first things first, know your trend, right? So I go to my 4-hour time frame, and on my 4-hour time frame, I've been seeing some massive movement to the upside. I've been seeing some massive movement to the upside, right? Okay, 1 and 2, all right. Now, obviously, price broke my structure here, came to retest it, came down again to that resistance level. Okay, where price just took out my structure here. You can notice that price came back, bounced off it again. It means that price continued on that upward trajectory. Okay, so giving me another level. So now, what you have been experiencing, that Euro USD has been ranging at this level. It's been giving me equal highs and equal highs. First, second, three. I think it has been like triple top. At the moment. So this is basically just my giving me my direction. So I look out on my 1-hour time frame. Now you'll notice that this is a resistance level here. Let me still zoom out. Now, what do you notice? This is clearly a resistance level that USD JPY Euro USD rather has failed to break since when? It has failed to break this high since August. Okay, since last month, basically, it has failed to break this high. Now, I want to find out reason why it's failing to break this high. Is it that after going up for a while, is it that price is now, all right, look at it. So you can see price going up for a while, right? Is it that price has gotten to a supply zone? Remember, the whole idea is demand and supply. What is happening in between now? We just need other strategies to help us understand. So it means I go to my higher time frames, I look at it. Now, I find out that coincidentally, it's not just at this point. From my daily time frame, price has been doing that for a while. So price has given me that level before, this level before, and it's also taking that level again. So price is obviously, and the last time price got to this level, the last time price got to this level, you could see how massively it came all the way down. Now, this is my daily time frame. This is my daily time frame. You see how massively it came all the way down, went back, came down. Anytime so price is back to that level now, and twice it has failed to break that particular level, which makes that level a very good level for me to keep taking trades. So on the other hand, as price was taking this level, you notice that I was having this particular trend right here, obviously has been broken. You know, we tested, we tested, we tested. That's why we are having a sell-off at the moment, and I'm having a demand area right here. So who noticed a demand area here? All right, clearly a demand area right here. So let me see. So I mark my demand area. The candle preceding, right? Preceding the high all the way to the low, and I extend to the future here. Now, remember what I told you, that my demand area. So notice that the first time it created this demand area for me, but it came back. Now, notice price slowed down when it got to my area here, and not just slowing down, before price moved up, excuse me. Okay, so I have my demand area right here. The next time price came all the way back there, this massive explosive candle bringing it down, it slowed down, right? And with this candle here, and not just that, before this candle closed, you could see this massive rejection, right? This is what I want to happen at my demand area to be sure that, okay, price is most likely not going to break it. So I take my buy and we start riding the upward movement. So price has been riding the upward movement back to my resistance. That's my supply area. Now, this is not just resistance area. Don't make that mistake. This is a supply zone. Now, yes, it's resistance, but it is resisting because it's a supply zone. Okay. Now, remember that the last time from my, let me look at my 4-hour time frame again. No, my daily, sorry. The last time price got there, you could see how massive price was. Price came all the way down. So is it that price is coming from back to this happened to be another massive demand zone whereby price will get there, trend all the way up, all the way up, get there, trend all the way up, you know, all the way up. So is it that price wants to trend all the way down? Now, if it does, it means that this demand area we are seeing currently is not going to hold so much water again for us. So what do I mean? It means that I am looking at price as clearly broken this my demand area, is retesting, and the retest is holding, which means that price is most likely going to do what? Keep going all the way down. So we are looking at shorting our Euro USD. And already, let me see if I can just go in already. Let me see if I can just go in already for Euro USD. Okay. All right. So I think that trade at the moment, I'm going to be having my stop loss above my zone. Okay, above my zone. Now, on the condition for which my stop loss will be taken is if price obviously wants to come back and go back all the way up here again, or else I am looking at, you know, price tending all the way down. Let me see how far this guy can extend. Aha, all the way to this low here. So I'll be having my TP right here. Okay. This should give me 100K and 9. If it does that, let me see. Sorry, I'm just trying to. I should be in profit already. Yeah, I'm in profit already. Excuse me. I'm trying to minimize this area so I can see. Okay, so clearly you can see basically I'm already in profit for my stuff here. So US 100. Let's see. Okay, I'm already in profit of this. Let me see, US 100. Let's go to US 100. My strategy I'm using for the analysis today is, now my goal in the long run is for you to understand the way the market works and be able to capitalize using these simple strategies, right? This is a very special indicator. Let me take it out. Not for us here. These are for some set of persons who are VIPs. Now, all of these strategies I'm just talking about, that indicator comprise everything which will just show your demand zone, show your point of interest, your discount zone and your premium zone. When price has broken a structure, if you are going to be buying or selling, it breaks down the whole thing. You just need to understand the indicator, and that's all. You don't crack your head, all right? But they are strictly for VIP clients. Let's see. Now, this is gold, right? 4 hour time frame. Remember, you always start from 4 hour time frame. Like now, you can decide to use any time frame. I'm just showing you how I do my analysis. 4 hour time frame, basically, right? Now, on my 4 hour time frame, which direction has price been moving? What direction? What direction? The upward direction, right? So clearly see. I'm looking for how to get my good trend line. Very good trend line. Okay. Okay. I think I can even extend it down here. All right, I have my good trend line right here. Uh, so obviously my trend line has not been broken. Thank you so much. Um, So obviously my trend line has not been broken. So which means that there's still a good tendency that I can keep buying this guy. But whenever price has really bought, we have what we call an overbought. So I'm not really interested in buying at that particular point. Again, I'll need price to do kind of like a retest in order for me to know when to buy. And a number of ways I can try to find out after price has bought for a while where price is most likely going to come to in order to buy again. Yeah, there are a number of ways I can do that. There are a number of ways I can clearly do that. So let me just show you one of those ways. One of those ways. Now this is where the highest point price I've gotten to, and before then, there was a support level all the way here. Okay, so price clearly took out this support, came back inside, took it out. Now it's not really respecting this zone as such. One other thing you need to understand when you are trading is that gold goes the direct opposite direction of the US dollar. So I need the US dollar to be strong, very strong, for this guy to fall. I need the US dollar to be weak for this guy to really pull up. So what we experienced yesterday, what that upward movement was due to the weakness of the dollar, due to the weakness of the dollar. So what I have here, let me see. Okay, I have this my support area right here, which was serving as support. Price took out, took in, took out, took in. So is it that price will stop here, or will price continue to go in the upward direction? Now, there is something that you guys are not seeing right here that I'm just seeing. I don't know. I wish somebody can just tell me this thing. I wish this is like a physical class where someone will just say, "Oh, there is something that is just lying down there, which you guys are not really seeing, which is your supply, your demand area, your demand area." Now, where is that demand area? I had a demand area somewhere here, right? So the candle preceding it is this bearish one, the high, the low, all the way. Now, what do you notice? So now this clearly shows us that, look, what price is doing is price is not just moving randomly. Now, for instance, price got to this high. It couldn't really come down. It got to this high. Now, you notice that, okay, there's a support here. Now, you obviously want to buy from there again. Now, you bought at that level and it did not stop. The difference between this level and this level is this level is just a support area, and support areas can, it's good, but it's not that strong compared to a demand area. This is a demand area where we have an explosive move to the upside. So I mark that level. Hence, price will respect more of my demand area than just my support. I don't know if you understand. That's the clear difference. A demand area clearly holds more weight than your average support area, right? So that's why price is finding it easy to break in, break out. But here, no, just upward. Now, what am I expecting? One of two things is going to happen. Price should come back here. Now, notice that I have my trend line already, right? My trend line guiding me to continue that upward movement. Now, when my trend line can coincide with price coming all the way down here again, so I should experience another movement to the upside, possibly hitting here, okay? So price just came here to gather more momentum, right? For price to either go up or down. Now, on the other hand, if price can continue all the way here, gets back to my supply area, what am I expecting? I'm expecting that price has the possibility of pulling back down again. So it's either this or that, right? But what do I prefer? I really love to see price come back all the way down. I have more chance of winning that trade if it comes to my demand area here. Now, why? Because the overall trend on gold is clearly an upward trend. And I don't like being on the other side of the trend, the opposite side. I like aligning my trade with the direction of the trend. It gives me a high win rate, right? I stand very, very high chance of winning that particular trade. So that is what I'm expecting for gold. Which gold did we just? Well, I think I closed the one. Okay, right. This is it here. So I stand a very high chance of winning that trade. Okay. Now, on the other hand, if price can clearly break above this level here, which it can, like actually it really can, right? So then we can continue buying all the way to our supply area, which is, you can also call your resistance area right here. Our time is really, really fast spent. How can you join the VIP? Just contact your account manager, or I'll drop my number at the end so you can just chat me up, all right? So let's look at US 100, US 100 quickly. Okay, thank you, US 100. So let's see what we are possibly expecting for this guy. Let me start the analysis afresh. Okay, all right. Where do we start from? Remember, 4 hours, right? Zoom out, see. Now, this one, this is where it becomes dicey. This guy is not, it's giving you, you can see an upward movement, which was later broken, tested. You can see a downward movement prior to that one. All right, you can see that's downward movement. So whenever we are not having a clear-cut direction, all right, we go higher, like your daily time frame. You zoom out. Okay, you zoom out. Let me see. Let me try my weekly. Okay. So I think my daily should be enough. I try my daily time frame. Now I noticed that this is more like the highest point price has gotten to, which can also serve as my supply area. Now, I think I have more of my supply area at this level here than this. I just have one massive candle, one explosive candle to the downside, but I have massive explosive, an indecisive, and a decisive. I think this is the best bet, better bet for me than this one all the way here. Now, if I then capitalize on this, the candle preceding that particular move. Okay, the candle preceding the move. Now I can either use this or I use this both. So let me just use this. So if I extend it into the future, the high and the low, now what do you notice? I like using red for or maroon for my resistance, then green for my support. It helps me psychologically. Whenever I see red, I know I just want to sell from there. Whenever I see green, I just want to buy from there. All right. So now this is my supply zone here. So if you are wondering on your 1 hour time frame why price is tending to the downside after having series of upward movement, all of a sudden is heading to the downside, is because price just hit our supply zone. Okay, price just hit our supply zone. Now, I'm back to my 1 hour time frame. Okay, but on my daily, let me complete this analysis on my daily. Let me just quickly complete it. Demand and supply, especially on indices, demand and supply is a bit heavy on indices. It helps you to win much more trades on indices. Then now, guess what? This area is a very solid demand area. Now, remember, this is mechanical. You don't think. There's a format you follow. The format is which candle started this move, this bearish candle, right? Now, you must mark from the high of that candle all the way down to the low. And from the high, starts from here to the low here, then I extend to the future, right? Good. I change to my green. So sometimes you can have a small zone, sometimes you can have a big zone. So this zone here is clearly wider, like bigger than this zone. But the good thing is price has tested that zone. You can see how we retested it here, right? It created the zone all the way here. Sorry, let me go back. Aha, it created the zone here. Now you can be wondering why here. No, not really. This is where the main move started from, and it respected it here again. Now, that means in future, for my if this guy keeps tending to the downside, there's a very high tendency he's heading for this level here. Like a very high tendency is heading for that level. So, but I need to be sure price is really heading to that particular level. So what I'm looking out for is my market structure telling me that price keeps going lower and lower, right? This is the highest point, lower high, lower high, another lower low again. So possibly wanting to create a lower high. Where can it create that? You see this resistance level all the way here, right? This resistance level, right, all the way here. Like this. Now, if you notice, price broke that level and use that level as a support, right? But you can see that it's not really holding too much weight again, and price has finally broken it. So I need a retest of that level here in order for us to have a continuous downward movement. And guess where it's headed to? All the way here. So you can see it has a long way to go, and it's not going to do that in 1 day. Possibly might not even do it in 2, 3 days. It might do it in a week or two. So I know that anytime I come to my US 100 chart, I'm looking out for a sell trade until price tells me otherwise. Okay, so this is how we do analysis based on demand and supply. So for instance, the last thing I'll just say, because this is past our time already, I'm sure that this guy is into the, there's another way I can tell where I can continue selling from, which is this. I apply my Fibonacci retracement. Now, since I'm expecting price to possibly continue on the downward movement, I apply the high that gave birth to this low. Now, I'm waiting for price to hit my golden zone, which is between my 50 and 61.8. But the problem is that my 50 and my 61.8 level is just below my previously broken resistance level. Okay, so it means that price can possibly get to this level here before it starts continuing that movement to the downside. All right, so for those who really like to learn this strategy, trust me, I can start showing you so many charts. It will be like a light bulb moment, like a veil is coming out of your eyes. I can start showing you when price is on a particular trend, either up or down. Price goes up, comes down, retraces, and continues. The problem is, oh, you're expecting price to come back all the way down to where it started from. Most likely not. So how do I know where to join from? I want to take you on a Fibonacci point of interest, which I'm going to be having this very Friday, especially for those who are in Abuja. Now, if you are not in Abuja, you'd like to join the class, just let your account manager know we are going to be having the same thing also online. I'm going to be taking that particular class. I can also couple it with this demand and supply area added to your Fibonacci point of interest, where I can take trades. Now, this is a winning strategy, all right? Now, it is just for the VIP client. But on the other hand, we're going to be having some banks on Friday, 11 a.m. also online. He's going to be taking us on a strategy. Now, for those persons who have been losing money, how to recover using patterns. Now, whatever you think I've shown you here, that you think, oh, it's nice, trust me, this is nothing compared to what Sam is going to be showing you. I actually learned some of these things from Sam. I learned some of them from him years ago. So Sam is going to be showing you how to recover your lost funds with all of these chart patterns. Now, for somebody who just opened US 100, you look at the chart, you are confused, but I just clearly broke it down for you. And from this point, you obviously know what you are looking out for, isn't it? So I'm expecting price. I know that, okay, price has a higher tendency of going all the way down, all the way to this level down here, but it won't just do it automatically. I need it to retrace first for me to continue selling. And where am I waiting for that retracement? This level right here. You can get here, I sell. So you clearly start to understand what you are seeing on your chart, right? So that is what we are going to be showing you right here. Account managers, they are going to be giving you that info, sending you the link to the classes and everything. So this is my number. 0265822493. Victor, right? So I'm Victor, call me Bishop. 00265822493. 00265822493. Victor, you can also call me Bishop, all right? So that is about that. I wish you all a very peaceful day. Looking forward to seeing greens or in blues rather. I wish we had time to look at more instruments, but next time we can have more time. Yeah, yes, some banks you still expecting today also. Yeah, yeah, you can still have some banks. Okay, I'm still in profit on my Euro USD already that I've taken that particular trade, and it's still very far from my TP. So I'm expecting a lot of profit. I just dropped my number on the chart. Let me drop it again. Let me drop it again. Especially for some who might not see my charts. Let me see. So, okay, everyone in the meeting. Okay, so I've dropped my number here. All right, I've dropped my number here. So, looking forward to seeing you in those classes and have a peaceful day. Please don't forget to contact your camera managers. We have a lot in stock for you. Please, we have your best interest at heart. We want you to make money, but the problem is the vast majority of persons do not really understand the market. They just come in hoping to just make money, but you don't know how this money is really being made. You are trying to make money from smart people. You have to be smart also, right? So these are winning formulas, winning strategies we've been able to come up over the years. What is even working for us? What is working for me personally? I just showed you one of the concepts I have. I have three major concepts. I just showed you one. In fact, this one, we didn't go in depth because we don't have a lot of time. So like I said, on Friday, I'm going to be taking you in depth also. So you can also join that particular class. Please contact your account manager to get more info on it. All right. Thank you very much. Looking forward to seeing you with some banks also today. All right. Thank you so much.
Okay, good morning, everyone. You're welcome to this PFTP, this advanced class. Very sorry for the delay. We just wanted to make sure more persons join us. But I think we can start now. We have about 30 persons here, so I think we can just go ahead and begin. And we're not going to be taking time at all. This class is on trend line strategy. Within the next 30 to 40 minutes, we should be done with this. We're going to be having another special class by 12 noon. That's the SMC class, right? We'll be having that class. That SMC class will be week two of the class. We had the first one last week, Wednesday. We'll be having another one this coming Wednesday, just today by 12 noon. So we need to be done with this before that class. But it's not a problem. What we have to talk about is something that is very basic. Um, I would say, basic. Let me use the word basic instead of word simple. But very basic, but still so important, and that is trend line. That is trend line. When we talk about trend line, what do we mean? First of all, why is something like trend line important? In a minute, we'll be looking at our chart because it's a practical class, right? But just to explain why is trend line important? First of all, trend line is very important because it's something that helps you identify one of the most important aspects of the market, which is the trend. You understand? Most times you find out that if you're trading within the trend of a market, that is where you are. That's when you have a greater chance of making profit when you're trading within the trend of a market. Now, a lot of strategies have come out, a lot of indicators have come out, a lot of systems have come out to be able to identify the trend, but it's gotten to a point where many persons forget, the simple and basic um, um, workings of the trend, and that is the trend line. If you understand that, just with your phone, with your without any special indicator or whatever, you can actually I believe you can do better in your trades, right? So to begin, of course, we have basically three types of trends, but two major ones: the uptrend, the downtrend, and the sideways trend or ranging market consolidation, different names to call it. But majorly, we have the uptrend and the downtrend, right? In an uptrend, that is where we are expecting prices to actually go up, consistently. In an uptrend, doesn't mean that the market will not sell, but what it means is that the market will buy more than it sells, right? So when the market buys or when the market sells in an uptrend, it's just a retracement for the market to buy more, right? Good. So let's go to our chart so that we just take everything from here and explain as much as possible. I have something I believe that will really help us when it comes to understanding trend, or something that will really help us when it comes to trading. Trading itself is a fusion of technical and fundamental, but the truth is this: I strongly believe that a lot of market decisions, a lot of market decision is more technical than fundamental. And that's why I advise people to stick more with technical analysis. A lot of persons that trade fundamentals do that just because, maybe they want to make quick profit. But sometimes it's very difficult to kind of analyze a fundamental before it comes out. And so what that leads us to do is to place a buy stop, place a sell stop, hoping that price goes in one direction and not the other. And that causes a lot of trouble, a lot of problems. But if you're able to understand technical analysis, work with your strategy, at least the highest you can do is during high impact, you can either stay off the market, or you can even analyze fundamental and markets using technical analysis. Yes, you understand. And so instead of buy stop, sell stop, having situation whereby price triggers both of them and this and that, just knowledge of some of these basics can actually help you to make consistent net profit in the long run, which is something that actually works. Some people, the first time they trade high impact, they made a lot of profit. Second time, made a lot of profit. But since then, they're having one issue or the other. It triggers both entries, the entry, this and that and all that, but you can actually make consistent profit using technical analysis. Now, let's look at this chart that we have, 4 hours chart, Euro USD. Right? A trend is the general direction of price. The trend is a general direction of price. If you look at this market right now, you can tell that judging from this place, I shrunk my chart so that we can see a greater portion of the chart. Okay, judging from here like this, the market has actually been on what? On an uptrend. What does that mean? It means that the market has been able to buy more than it has sold. Right? The market has been able to buy more than it has sold, which is fine. This is an uptrend. In a downtrend, you will see the market selling more, okay, than it buys. What that means is that the market will be making lower lows. So if you check this place here, at this point, making lower lows in the market. You understand? So that is it. That is what trend is all about. And trend can exist on different period. Trend can be how will I say it now? A trend can be short term. That means a trend can just happen for a short amount of time. A trend can happen for a long time, intermediate, just like that. But one thing that is standard about a trend is the behavior of the market, the interaction or the relationship between the highs and the lows of the market. That's very important. If you look at Euro USD on the daily time frame, you can tell that the price from this point here, from here, price raised all this way, price retraced, price gave a higher high, price retraced, price gave a higher price retraced, price gave a higher price retraced, like that. So it tells us that, oh, this market like this is still on an uptrend. But what happened? We noticed that even on Euro USD here on daily time frame, after price made this last high, now let me zoom in so that you see what I'm talking about. I'm just trying to say something I said about 2 weeks ago, something I always say, that you can actually trace the behavior of price on the trend. You can trace it and know what the latest gist is. Let's look at this. Now, all the way from here, when price traded all this way up, right? Price retraced to this point. From here, price traded and gave us a higher high. Then price retraced like this. Now, from this point here where price retraced, price gave the first high, right? That is the first high. Very good. Now, from that point, if we check again, you will see that when price tried to come down, when price came down, price did not come as low as the last point, right? Price did not come as low as the last point, only for price to give a higher high at this point here. And then from that point, price retraced. But even when price retraced, price did not trade as low as the last place. So what is price doing? Price is giving us higher lows and then giving us also what? Higher highs. Okay, from that point, price still came down like this. Price came to this point. Now, if you have been following this line I've been doing, you see that whenever price retraces, price goes higher, isn't it? Now, but you notice that something happened here. Price tried to go high, but it did not go as high as the last time. It didn't go as high as the last time. Only for price to come down and come down lower. Since June 2024, this is the first time that we are having price giving us a lower low. So it tells us that there is a change in this trend, and it's very important that you're able to track price like that to be able to tell when that stuff happens. Is very important. You understand here? Because when you can tell that, you can now begin to watch and look out for opportunities in the market. They normally say that if you understand that, if you understand the trend of the market, you can tell where to enter trades. Like if I can tell the market is on a downtrend, I know that my best position to take is a sell, and the best places for me to take myself from are strong resistance points. You understand? I know that if the market is on an uptrend, my best position to take is a buy. Oh, if my best position to take in is a buy on an uptrend, the best place I want to take my buy are strong support zones. You understand? So that's how it works. Now, from this place, price return back up to test that resistance point. And what we see price doing right now, we see price what? Price selling. Now, if with what we have followed on this trend, it is very possible that this particular movement continues. After these two lower lows like this, it is very possible that Euro USD gives a major retracement. Very, very possible. You understand? So that is why trends are very important. But yes, what we want to talk about is trend line. You know, what we want to talk about is trend line. How do you draw a trend line? How do you draw a trend line? This is very basic, but it is also, it's something that can actually help. How do you draw a trend line? Now, remember how I said that a trend can be short term, can be long term, can be intermediate. But if you understand the trend, you can do very now. How do you draw a trend line? First of all, let me pick a particular zone to explain this thing to us. Now, you draw a trend line. If you're drawing a downtrend, for example, and remember, you are going to draw a downtrend after you see a change of behavior in the market. Look at what I mean. If you check Euro USD on your screen right now, from all these points here like this, you see how price was going high, retrace, give a higher high, retrace, give a higher high, retrace, give a higher high. Oh, beautiful. Right? All of a sudden, what does price do? Price retrace. Instead of giving a higher high, price gives a lower high, only to come down here and give a lower low. So something has changed. Something that was giving higher highs and higher lows has given two consecutive lower lows. Something that was giving us lower, higher lows. If you check all the lows here, one low, another low is higher, another low is higher, another low is higher, another low is higher. Oh, it's giving us higher lows, but all of a sudden it comes and it gives us two consecutive lower lows. There is a pause. There's something for you to understand that, oh, something has changed. So what do? I connect with my trend line. I connect the two highs of the market. Now, this time around, if I'm drawing my trend line like this, I always like to select this ray. This ray here, I always like to select it so that when I select it, my trend line can be drawn automatically. I don't like to draw my trend line subjectively. That means draw it the way I want. I like to draw my trend line objectively. So, let me take it again. Remember, price was making a higher high, right? Higher high, higher low. So this is an uptrend. I'm checking. Oh, lows, one low, two lows, higher. Oh, very good. All of a sudden, I noticed that price made a low here and a lower low. In an uptrend, price is giving me two consecutive lower lows. Price is giving me two consecutive lower lows in an uptrend. That means that there's something happening with that uptrend. There's something happening with that uptrend. So what do? I connect my highs together. Okay, of course, as we go along this class, if you have any questions, please make sure to drop it in the chat. Just drop your questions on the chat, right? Just drop it on the chat so that I can attend to it. Now, as price as I now use because I'm looking for a down opportunity since price has given me two consecutive lower lows. I connect my first high to my second high. Once I connect it like that, I am waiting for price to approach my line the third time. Guys, the third touch of your trend line is something that is very important. I personally have a strategy I trade with like that really works for me. The third time price touches my trend line is usually a good time for me to enter the market with that trend. The third time, first touch here, second touch here, third touch here. At this point is where I look to take a sell in line with that trend that I have taken. And that is where I take advantage of the market. You can actually use this on different time frames, even on 15 minutes, even on 5 minutes, you can actually use it. This strategy is not a strategy that is fixed to one particular time frame. It's just that if I'm doing something like this on 5 minutes, I do not expect price to move so high. Like in this case now, price was able to sell over 120 pips in my favor. That's because I saw this on 4 hours. If I see something like this on 5 minutes and I want to take advantage, I may not be expecting price to move in my favor for over 100 pips. You understand? Now, let me point something important also. You remember I said that if you even understand the market, especially technical analysis, you can even use it to analyze fundamentals. Now, during the time that this move happened like this, 1 was rejected, 2 was rejected, right? This market that moved and touched this trend line was during a high impact. It was during a high impact. Now, let me explain something to you. Some people now have placed buy stop. Before this time, I placed buy stop, place sell stop, right? Because in their head, that is like the best way. And not only that, that's the only way they trade, which is not healthy at all. Now, this particular market has triggered sell and triggered buy. They're in problem. But somebody who is using a trend line sees that this is the third touch. And even when price buys to this place, is willing to take advantage of his sell, or immediately sees that the market is rejected at this point, can take advantage of his sell on Euro USD. But somebody who has gambled a buy stop and a sell stop around this point is in problem. The third touch of your trend line happens to be a very good trading strategy. And because it is a technical analysis, because it is a trading strategy, it can apply to different time frame, it can apply to different instruments. It's not something that only works for currencies. It's not something that only works for commodities. It's not something that only works for indices. It's something you can apply. But I find that, I really love it, especially on currencies, because then on currencies, it can actually go in a very good, this, especially when I use the third touch on 1 hour, 4 hours, I look out for at least 60 to 100 pips. Let's look at more examples just to properly understand what we are talking about. Examples are very important because they help us see where it works. They help us also see where it doesn't work, right? Because that's also important. It's important that when you have any strategy and you are practicing, you can tell where the strategy works. You can also tell where the strategy does not work. That's important. Because there's no strategy that actually works 100% of the time. There's no strategy to be able to make consistent net profit. Consistent net profit. So let's continue. Also, please do not forget, you can drop your questions. I've not gotten any question yet on the chat. So I'm really wondering, I hope we are catching up with it. If there's any aspect you do not understand, please drop it on the chat, and I will attend to it. Okay. So let's continue. Now look at this market, right? We are trying to understand how to use the trend line to our advantage, right? How to use the trend line to our advantage. Now, let's look at it. Let's start from here. This is already a good trend whereby if you see USD card, you see this chart, this USD card 1 hour, you can tell that this market is on a downtrend. I like to explain from the beginning of a trend so that you get the idea, right? This market is making lower lows. Very good. Making lower lows, right? That is how a trend works, right? Beautiful. Lower lows, lower lows, lower lows. Now it gets here. This is the last low it made, right? What do we expect? We expect that when it retraces, it will give us a lower low, right? But instead, from here, price retraces, price gives us this low. This low is higher. It's higher. Price retraces again. Price gives us another low. So there happens to be a change. Something has happened. Something has happened in this market. What do? I draw my trend line to connect the lows of this market. You see what I'm doing? I draw my trend line to connect the lows. Look at it here. From this place, price is making lower low. It gets here. Instead of to make a lower low, it makes higher low, makes another higher. So I connect my, listen to the first low here, right? All through this place like this, it made the same. It could not break below this place. That is why I place it here, because this all equal lows, right? So this is 1, 2. This price zone is 1, 2. Now what happens? Price does all it can do, and then price returns to this place. Price returns to that my trend line during a high impact, coincidentally again. A high impact that first pushed price down, and I noticed price is rejected back within that my trend line zone. That's an opportunity for me to take a buy. The third time, the third touch of the market, how price was able to trade to the upside over 100 pips. The third touch, first of all, you identify the trend. If you're very lucky, if you're lucky enough to enter into that trend at the beginning of the trend, it's very important, because then you can now easily note the first and the second point, so that at the third touch you can go into the market. Okay, is there anybody who does not understand what I've said now? Please let me get your feedback, guys. Is there anyone who does not understand? Or if you understand, please just let me know that you understand. Anyone? I've not gotten any response. So if we understand, just drop it on the chat and say, I understand. But if not, please let me know before we go ahead to the last part of the training. Oh, very good. Thank you. Thank you, Emmanuel. Very good. Here. What if we have 4 or 5 touches? Well, that's not bad, but I advise that, personally, I feel like the third time is good. See, so the thing is that as long as that trend line now, this is a very good question, because it helps me explain the next part. Very good. Thank you, guys. Thank you so much. Okay, I've gotten your responses. Now, somebody has asked a question, and that takes us to our next part. So I believe we understand that from the third point, price touches a trend line. It's a good place to enter the market. Now, somebody has asked that what if price touches it 4 times, 5 times? What happens? So that trend line now becomes a support and resistance point. That's your trend line now becomes a support and resistance point. Let's look at our example. For my example, this was the third point. From this place, we took advantage of a buy. Oh, beautiful. Over 100 pips of profit. Very good, right? Also, what happened here? Here, price came into this trend line, was rejected back again. That gives you another buying what? Another buying opportunity of over 70 pips. Price, so that trend line now becomes a reference point for you. Now look at another thing that happened. Now what happened? Price now broke this trend line here. Price broke this trend line. What does that mean? It means that price was able to sell below this trend line. And as price broke this trend line, for those persons who were able to attend our class, our SMC class, is still ongoing actually. So our SMC class is still ongoing, but for those persons who were able to attend the SMC class, right? Remember, we now talked about something like fair value gap. So when price broke this thing, price just came back to fill the fair value gap here. Now, the fact that price has broken this thing, it gives me a sell opportunity. What the market will now do is that the market will now return back to test that trend line and be rejected from there. That one too, that trend line now gave me, that was a buy. That trend line that was a buy opportunity now became a sell opportunity again of over 150 pips. So the truth is that that's your trend line after it has been tested 3 times. if it has been tested 3 times, it gives you a strong support or resistance zone, and you can begin to trade along that line. You can begin to trade along that line. Like this, as USD-CHF is doing like this, USD-CHF has broken. Right now, USD-CHF has broken that structure. If you want to do an analysis of USD-CHF, it has broken that structure because something that was going up has given us lower lows. It has given us lower lows. So all we need to do is to connect those two lower highs. From here like this, I can connect like this. From here, I can connect like this. Right? This is my first high that gave this low, right? Then the next high that gave a lower low is this place. You understand? So what I will now do is that at this point here, this was the third time. Very good. We have seen a place where it does not work, where it did not work, right? This is the third time. When price approached this place here, from this point, what happened? Price was rejected, but it did not sell so much. It did not sell so much. So let's say we took a sell from here, for example. Price would have sold just a bit, then price was rejected. Now, immediately price broke above this trend line. Immediately price broke above this trend line. Okay, that's your sell trade that you entered. The fact that the body of the candle can now break and close above that trend line, that your sell trade that you entered is a bad trade. You close it in that loss, but you will wait for price to return towards your trend line. You can now take advantage of a buy. That trend line now forms the movement for you. As this trend line is like this, anything that makes USD cards to retrace towards that trend line, if anything can make it retrace towards this trend line, I can see an opportunity to still buy USD card. You understand? So that is how it is. Now, somebody is asking how many days does it give? That's a very funny question, because nobody determines when price gets to somewhere. So you need to understand that a very important part of trading is patience. A very, very important part of trading is patience. You have a strategy, wait for the market to come into your strategy. You understand? So if you are, for instance, in this example now, in this example, we saw this particular pattern 27th of August into 28th of August, and price came in for that our buy zone around 6th of September, which is like a week later. A week later, price came into that buy zone. So this trade, for instance, took about a week. Some trades can take longer than that. Now, if you do not want to, if you're someone who doesn't want to stay too long, okay, you can use this pattern on a smaller time frame. You can use this pattern on a smaller time frame. If you want to use this strategy, but I don't want to stay too long in the market. I don't want to be waiting for too long. I don't want to be too patient with the market. You can use it on a smaller time frame. You understand? All you need to do is also make sure that you're following and you're reading the trend properly on the smaller time frame. You're reading the trend properly, and then you can now easily tell what the market is doing. For instance, now this is 15 minutes on USD card, and what USD card has been doing on this 15 minutes has been giving us lower low. If we from this place here, you will see how that USD card gave a high, ranged around here, and was able to break below this point here. All these points where the market has been ranging, this place here where the market has been ranging, USD card was able to break below it on 15 minutes, right? Since it broke below it, USD card proceeded to give us this low, give us a lower low, right? Give us a low. So what I can do, or even on USD card like this, I can draw a trend that connects these highs together and say, this point here are points where I want to take advantage of the market. Something like this. I want to take advantage of the market so that the next time price approaches, I'm not drawing my trend line well. Yes, good. So I can take advantage of the market from here so that the next time price trades below my trend line, when price gets to my trend line, I can look for a sell opportunity. But if you see how long price sold in this case, price sold like 40-50 pips. So if I'm doing something like this, if I'm trying to work with the third touch, okay, on 15 minutes, I am not expected to stay on that market expecting 100 pips of profit. Even this 50 pips was a good example. If I'm doing something like this on 15 minutes, I may be looking out for around 20 to 30 pips of profit. You understand? So this is the strategy that is important. It's important that you understand the strategy. So when you understand the strategy, you can now apply that strategy on different time frame depending on how you want. You understand? You can apply a strategy on different time frame depending on how you want, but it is the strategy that is important. Understand the trend of the market. When you get the trend of the market, you can now take advantage of the trend of the market using a trend line. Look at this market, for example. This is oil, just for us to understand. From this place, oil was giving us an uptrend, higher high. Now it got to this point, the highest point it got to, right? And then from that point, it gave us a low. It gave us a low. This is the highest point. It gave us a low, retraced, gave us a lower low. Two ways this can be traded. Even if somebody connected these two high points, from this high point and this high point here, even if somebody connected these two high points like this. Oh, sorry. This is what I'm talking about. Yeah. So price gave this next big retracement that price made was this, and price rejected it again. This is first high. This is second high. Third touch is the third time price approaches that trend line. Oh, I've gotten another very good question. Are trend lines drawn from the wick or the body of the candle? I draw my trend line from the wick. I draw my trend line from the wick. You understand? Because the fact that price rejected at this point here tells me something about that price zone. The fact that price rejected around this point tells me something. So I draw the trend line from the wick. You understand? Yes, I draw the trend line from the wick. Okay. So you can actually draw it from the body, but I like to draw my trend line from the wick. Okay, so sometimes, now let me say something. Sometimes your trend is not very perfect. It's not so clear to you. I always say this whenever I teach any strategy, because when we explain strategies like this, sometimes it's very easy, very clear. The examples are perfect and all that. And it looks like, oh, these examples are perfect. If you're using a trend line, if you're trying to draw a trend and that trend is not clear to you, the trend is not clear to you, you can look out for another instrument. You don't have to trade that particular instrument. If that trend is not clear to you, you can look out for something else that is clear. Or at least you can reach out and say, oh, okay, let me ask my account officer, what do you think this trend is? Do you understand? There are times whereby the trend will not be clear. Yes, there are times the trend will not be clear. If the trend is not clear, it doesn't matter. All you need to do is look out for a clearer trend. You're going to get a clearer opportunity that you'll be able to take advantage of. Do you understand? So the idea is, what is the trend of the market? When you get the trend of the market, when the market begins to form a particular trend, you can now look out for the third time. The third time, once you have connected the two highs or the two lows, depending on the trend, the third time is a good time for you to actually take advantage of the market. Okay, the third time is very good. Like this is US30, for example. After making this, US30 has ranged for this, but this is not it. This is a sideways trend, right? Sideways trend pushed up. Okay, as it retraced, we expected US30 to give us a higher high, but from this place that it gave us a low, retraced, gave us a lower low. So if I'm trying to compare these highs together now, this is my high point, right? And this is my second high point, right? So I can monitor US30 around this point. This is 1 hour on US30. As US30 is like anything that makes US30 to retrace back towards this trend line, the third time, I'll be looking to take advantage of a sell on US30. I'll be looking to take advantage of a sell. You understand? So that is just how it works. You understand? That is how it works. Remember, for the person who said body or weak, I would say weak. I agree that sometimes the trend will be more beautiful when you use the body and all that, but I think long term using the weak is actually better. It helps you to get in earliest into the market. Okay, it helps you to get earliest into the market. So guys, This is very basic, but trust me, it works. You understand? Arm yourself with trading strategies instead of just things that are based on whether to go up or go down, buy stop, sell stop. You understand? Arm yourself with knowledge. So using a trend now, it's very possible that I don't know if we even have any it's very possible that US 30, for example, we just have a spike that pushes price towards this point, pushes price towards this point, and when price gets here, price has to respect it and return back. Do you understand? So these things happen. You understand? These things happen. You would really you'll be very profitable if you can understand and apply this. Another thing I want to say is that, guys, it's very important to practice. It's very, very important to practice. Yes, we have talked about this. If you think you know it now, it's possible you understand it now. But if you don't go back and look at it, trust me, you will have problems. You will have problems. So it's very important that you can go back and practice it. Okay? Go back and practice it. Once you can see a very good trend, the third time, once you connect the highs like this, the third time is a good opportunity for you to enter the market. You understand? But practice is very important. Yes, I explained when a trend line gets exhausted is when price breaks it, right? Once price breaks it, especially when you notice that price has broken, if price breaks above the trend line, first time buys, comes down, breaks below it, sells, that trend line is exhausted. So price breaking the trend line, means that trend line, another trend is already at play. So you can begin to now look out for the creation of a new trend. Now, if price breaks that trend line, like I said, sometimes it can happen that, for instance, this trend line still helped to push price down, but price was able to break above this trend line here. Price broke this trend line here, right? So price gave this point like this. All I need to do is, as price has given me this higher, we're looking for price to give me a higher high. Abi, for instance, price broke this trend line up here. Price retraced. I expect price to give me a higher high. It did not. It did not give me. Instead, the next high it gave me was still a lower high. So even after price broke this place like this, price is already creating another downtrend for itself. It's creating another downtrend for itself. You understand? Which, I can take advantage. I can take advantage of. You understand now? The price breaks, like for example, as price broke this one, this is the third time. This is the third time price approached this trend line. So I say I take a sell here, right? I take a sell here. But at this point, like this, price still broke it. As price broke it, price returns to that trend line. I now take what? I take a buy. You understand? So that trend line guides you to understand, especially before a big move happens. You understand? Hey, okay, let's look at gold. Someone has said we have a good example on gold, so let's check it out. Oh, beautiful. Look at these guys. This is gold on 4 hours. Price giving us higher highs. Oh, beautiful. Giving us higher highs. Gets here, gives us a low, gives us another lower low. Look at gold here. Gives us this high, gives us a low, gives us another lower low. So if we are connecting, this is the first high, and this is the second high here. So that means that if we're looking for an opportunity on gold, is likely to happen very soon. Once price touches this thing the third time, price is likely going to fall, break this point, and we may get a major retracement on gold till somewhere like this. You understand? That's just how it works. So this is a very good example. Price has been giving us high, but it gives us one low, gives us a lower low again. Tells us that, oh, there's something going on. So we can actually link up the first high, the second high, the third touch will be an opportunity for us to sell. What can we do? Once price approaches this place the third time on 4 hours, if you are not comfortable with taking an instant sell there, on that you can go to 15 minutes. Once price approaches that zone, let's say price now comes to this place like this, the third touch, and I'm not comfortable with taking it, say I still want some confirmation, I'll go to a smaller time frame. Once I see it's now selling on a smaller time frame, I take advantage of the sell. You understand? So thank you so much for this example. This is very beautiful, Musliuddin. very beautiful example. We have the first touch, we have the second touch. For instance, on smaller time frame, you see what we saw on 4 hours. On smaller time frame, it already gave us that sell opportunity on smaller time frame, because if we connect this thing together, we would have gotten our third touch, would have sold. You understand? So on a smaller time frame, you can actually use the trend line third touch strategy to take quicker positions, take shorter positions where you can actually make more profit. You understand? So that is how the trend line works, guys. I'm sure that we had a nice time. This is all we're taking today. I was able to answer questions. I don't think there's any question I didn't answer, but of course, I will still give the next 5 minutes for anyone who has questions. Let's ask. Don't forget, we're having the SMC part 2 today by 12 noon. If you've not gotten access to that class, the link for that class is not this one, it's a special link. So you reach out to your account officers for the link to that class. You understand? Reach out to them for the link to that class. Of course, there's a criteria for that class. We said for that class, you need to have a balance of ₦1 million to attend that class, but we're in part 2. Reach out to your account officers for that class. Then, questions, please. Questions regarding this. We have 5 minutes for questions. So by 10:52, if we've not gotten any question, I believe that we all understand. Third touch of your trend line is a good and beautiful strategy that you can work with. And remember that this strategy does not need any special indicator. You don't need to buy any indicator. You don't need to pack things and put on your chart. It doesn't. You don't need it. You can actually do it with your phone. You can do it with your system. You understand? Very good. Well done, guys. Well done, Musliuddin. Yeah, talk to me. Musliuddin has told me he's fine. Yeah, who else? 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 Oh, okay, very good. Okay, so I think we're all good. So guys, please, it's important that you go and practice. Go and practice it, right? That is what will help you to understand it. Go practice, right? Thank you all for your time. Yeah, okay. Thank you. Thank you, Desmond, for your feedback. Thank you for your feedback. Yeah, thank you too, boss. So we'll be having a swell time. Even tomorrow and Friday, we're still going to be having trainings. Okay, so just get ready. You'll be hearing my voice a lot from now on. A lot. Okay. So thank you. Thank you, Angel. Okay. Thank you, guys. Bye for now. See you by 12.